Welcome to this Think and Link series. I'm your host, Srinivasan. An interesting piece of news has come in from Gift City. Now, Gift City, as you all know, is Gujarat International Finance Tech City. It is a global financial hub. Now, you all may be aware that this particular city was established way back under the SEZ Act of 2005. So, it is India's first international financial services center. Now, when we talk about IFSCs, the IFSCA, that is the International Financial Services Center Authority, is the regulatory body for IFSC Gift City in Gujarat. Now, what is interesting is this IFSCA has allowed non-banking entities like alternate investment funds and other funds manager to issue overseas derivative instruments from the gift city, from the IFSC gift city. Of course, earlier banks were allowed, and now it is the turn of non banking entities who have been allowed to do so. So, what is this overseas derivatives instrument? Let's understand that. So, when we talk about ODIs, that is a short form for it, they are popularly called as ODIs. They are nothing but they are also called as P notes or participatory notes. Now, these P notes are issued by foreign funds operating in India to their clients abroad who prefer to be anonymous. Now, these notes are unique Indian invention which started in 2000 by SEBI to enable foreign corporates, high net worth individuals or investors to enter into Indian market without having to go through the process of registering as a foreign institutional investor. So, when we talk about P notes, so we know very clearly that P notes are ODIs issued and registered by foreign portfolio investors to their overseas investors who wish to take part in the growth of Indian stock market without wanting to register themselves directly. Importantly, the P notes have Indian stock as their underlying assets. So, very clearly, FPIs, when we talk about foreign portfolio investors, who are they? They are non resident investors who invest in Indian securities like shares, government bonds, corporate bonds, etc. And though P note holders have less stringent registration requirement, they definitely go through a proper due diligence process of SEBI, that is the Security and Exchange Board of India. Now, how does the market for P note work? That is what we need to know. First is the market for P note gets affected by interest rates and inflation and, of course, currency rates. Now, you may say that, of course, all securities and all financial instruments get affected by interest rates. Very true. Especially P notes, because P notes uh, consist of investors who are willing to remain anonymous. That's a basic thing. And with if wherever the current yields are high, the P note investors would automatically flow in there. The money which is meant for P notes would flow into that market. Now, currently, of course, you will see that the current interest yield in US is pretty high, and with no time schedule or indication when the Feds will reduce the policy rates, P notes may not be as attractive today as it was earlier. But remember, in India, India's capital market is on an upward journey. So sooner or later, we would see revival of interest of P notes. The moment the US Feds decide to cut interest rates, you would find that there would be a huge amount of flow into this ODI instrument of P notes. Now, if you actually go back in time, say about a decade back, participatory notes had earned a very bad name. Bad name because it was basically opaque in nature. But then, since then, there is a lot of, uh, you know, a lot of changes have taken place, and SEBI has come out with new rules so that we clearly know from where the funds come from, and it is not from any suspect origin. That's a basic. And another thing about P notes is, at times there have been cases where P note based selling in the Indian market had caused a lot of market upheavals and market crashes. So what this means, if there is a group of P note holders who want to encash them, obviously, therefore, the FPI or the entity has to sell the corresponding amount of shares here in the Indian market. And if there is going to be a huge selling, then definitely it is going to create market crashes. So, as I told you, over the years, P notes have been brought under SEBI's strict monitoring mechanism, and it is really not as opaque about their actual owners as they used to be. Now, if you remember in our FY24 budget, that is financial year 24 budget, banks in the IFCs, talking about banks located in IFC, Gift City, Ahmedabad, were allowed to issue ODIs to their clients, provided such instruments were based on Indian assets. Yes. So that's going to be a standard thing. The underlying has got to be Indian assets. Now, with this IFC, SCA has permitted non-bank entities also who are registered with SEBI as FPIs to issue ODIs with Indian securities as a underlying. Of course, these FPIs must be located in Gift City IFSC. Now, if you were to ask the market reaction is that this is a very significant step in developing IFSC into an international financial hub. So the market has welcomed it. The market is just expecting some additional changes, especially in terms of taxation structure for such funds, so that it could attract more international clients who would like to invest in India through the IFSC. And not only that, the very fact that IFSC has come out with this, the operational scope of Gift City IFSC has also taken a lead. So by enabling IFSC registered non-bank entities to issue ODIs, what we are doing is we are actually promoting and paving way for a diversified, robust financial ecosystem, which will attract broader spectrum of global investors and thereby enhancing our market liquidity. The only thing that remains to be done is, I think, from a taxation point of view, if taxation benefits are also extended to these non-bank entities, then this idea could be a hit and we could see more amount of uh, funds flowing uh, into our market. And of course, that would be to a great advantage for the Indian capital market. So with this, I would like to close this session. Thank you so much. I would see you in another episode pertaining to the banking and the finance sector. See you.